2021 was a pretty good year for stocks. The S&P 500 index was up nearly 27%, driven by the energy, real estate, finance, and big tech sectors. However, that doesn't mean all stocks did well, as the economy began to recover from economic lockdowns in 2020. In fact, small and fast-growing companies, by and large, underperformed the market in 2021, some of them losing value even as the businesses themselves continue to grow. So why would the stock of a growing business not grow if the business is? There are a lot of reasons why this might happen, but let's start with just one basic concept as explained by Warren Buffett mentor Benjamin Graham. He explained it this way: in the short term, the stock market is like a voting machine, but in the long term, the stock market is like a weighing machine. Well, what does that mean? In other words, the stock market is nothing more than a popularity contest from day to day or month to month, or even sometimes year to year. Over short periods of time, which include sometimes a year, sometimes 2 or 3 years, stocks are at the whim of the opinions of people. Now, if you think an individual human is fickle and unpredictable, multiply that by millions of stock market participants, and you start to get the idea of why short-term stock prices can be so wild. Even if a company is growing, various factors might lead many people to believe a stock just isn't worth buying right now, and thus it will fall in value. But over the long term, several years or more, the stock market will weigh the merits of a business, and eventually the stock price will follow the same path as a company's revenue and profit growth. So let's illustrate this with fast-growing digital payments company Square, which recently changed its name to Block. Notice how the stock peaked in value in 2018 in this chart, but then it proceeded to decline in value for almost the next 2 years before taking flight once more in 2020. These periods of time in which a stock might underperform the stock market, even though the business is still growing, like Square was during this time, it might feel like an eternity to us if we're invested in that stock. But with some patience and a few years of waiting, if the business keeps growing, eventually a stock price will reflect that business growth. So that's what happened to many high-growth technology businesses in 2021. After outperforming the stock market in 2020, the market's mood changed. Average investors started to favor slower growing, sometimes even stagnant businesses that were benefiting from the reopening of the economy. And high growth businesses were left high and dry, and so their stocks declined in value as a result. But given time and patience, these stocks will grow again if the businesses themselves also keep growing too.